welcome back to Mortgage Ballers. This is Rich Hanlin, and today I have Patty Lederman. Patty is with HomeXpress, but besides all of that, you need to understand I've known Patty a long time. I always try and bring home the fact that I'm about relationships, not about rates. When I got to put my purchases on the line for my investors or my first-time home buyers, I want to know if I have a trouble, a sensitive issue, a red flag. I don't play games. I get my incredible AE on the phone. We talk through it. We look through it. She's seasoned, been doing this for 30 years with me.
Longer
She
than I want to
understands
say.
financing, and we dig in. And are we always perfect? No, but by getting the right eyes on it and people I trust, there's the key to that. I now put my name on it with the realtors who are trusting me and the borrowers who are entrusting me with their biggest, possibly their biggest transaction of the life. Patty, thanks so much for your time today. I know you're busy because you're California time.
Yeah, and thank you for having me. Can I just say something about the whole trust thing?
Say what you want.
I understand the whole trust thing because I did real estate for 7 years during my whole span of that 30 some odd years in this business. And so I can see the angle from the real estate side as well. And so I know that helps, and it helps the loan officers as well. Because I know what's important. I know they have to go back to that realtor and give them an answer. So,
Well, my goal on this was to highlight some of what I think are the strongest AEs in the business, and there's reasons for that. Not just I have my criteria. My criteria is hard, and I know a lot of AEs. I know a lot of AEs that are out of the business, but there's like 5 or 6 that I trust. They have helped build my companies over the years, and because they come through, they understand the value of that real estate relationship. A lot of times, if I'm going to do business with Patty, it's going to be more my investors. But nowadays, if I'm being honest, that's most of my business is investors. But I can do it all over the United States now with 44 states.
yes,
And guess what? Patty can still help me in multiple
that's right.
states. Patty, here's the part I want to tell you, because take me through this. You were in the same boat I've been all these years, and then this incredible loan comes out called the DSCR. It has changed everything as for me. I will not do an investment property unless I do it as a DSCR. I am not going to gather all that paperwork anymore.
Right.
And I can streamline it. If everything makes sense, let's do it. But talk to me about that. When that first came out, and where's it gone since it came out? It sounds like it's here to stay.
Yes. So you're correct in saying that if you can go DSCR, you're better off doing it because of all the paperwork. And these investors expect kind of a fast process, easy process. They have gotten way more popular than they were when I first started 6.5 years ago. No one even knew what they were back then. So it's really taken off. The difference in rate between a full doc or alt doc and a DSCR is only like maybe a quarter max. So for all that extra work and everything, unless it's a really large loan, which most of them aren't, it really doesn't make sense. Now, there are rare occasions that the DSCR really doesn't pencil out and you're at a high loan to value. Well, then maybe you have to go full doc or alt doc, both bank statements. But for the most part, the DSCRs are really the way to go. Yeah. I will say that our max LTV is pretty high too at 80. So that is
What's the max loan amount at that 80?
Oh gosh, 80 I think is 1.5.
It is 1.5. Okay.
I think it's 1.5 at 80. And then I think I'd have to look at my grid. I forgot because I don't get very many big ones. Most investors are in that sweet spot between, as low as like 200 up to maybe 500, for the most part, depending on what state it is in. But a lot of the states throughout the country don't have as large of loan amounts as California does. So
are we seeing, and here's a question for you. I have a couple questions on this, and there wasn't going to be so much about your programs as much as I want people to know you, but why I've got you, because I want you to explain the difference. We hear 100, 105, 110, 115, that the rent ratio or whatever. What does that actually mean?
So DSCR, to start with, stands for debt service cover ratio. And those ratios that you're mentioning, what that is your estimate. Well, if it's a purchase, so to speak, let's just talk about purchases right now. You take the estimated rents and you divide it by the PITI. And that would include also PITI, including HOA or anything flood insurance, anything, the full payment. And that is how you come up with a ratio. So 1% would just mean that the payment equals the rents
Okay.
exactly. And of
What's
course,
the sweet spot on that loan? What gives you the best pricing?
1% or above. And then if you're 1.25, you actually get a price break. You get an even better deal. Yeah.
1.25 meaning that it's they know that you're taking home some profit every month.
Yes,
Okay.
quarter. Yep. Yep. So your rents are higher than your PITI. Yeah.
All right.
By quite a bit. Yeah.
Are you seeing anything weird? I mean, because you guys do a lot. Is there any states insurance wise things like that you're starting to see? And I guess investment property wise, but it still has to be covered. Would be my next question. How's insurance affecting that side of the market, investor side?
Um, it's mostly in fire zone areas that you're seeing real high monthly insurance that is kind of throwing off that DSCR at
Okay.
times. You see it in some parts of California. You see it in Florida. I haven't run into it in too many other places, but I know there's spotty areas throughout all kinds of different states that do have, much higher. And some places in Texas, I think too.
Okay.
And that can throw off. It can throw off that DSCR ratio quite a bit. We're also having some insurance issues in general on condos in Florida mostly, where they're not covering everything, and we can't even do the loan. So yeah,
Right.
yeah. So
No, I like it. Thanks for clarifying that. What and my last question on loans, I promise.
no,
Well,
you're
two
good.
questions.
That's what
The
I
next
do.
question is this.
Yeah,
How many DSCR loans can a borrower have with HomeXpress?
10.
Okay. So they can have
Mhm.
10 loans, not properties, but 10 loans with HomeXpress. They can have 45 with others, but only
Yes.
10.
Yeah, we have yeah. Some lenders actually have a limit on how many they can own, period. We don't have that limit, but it's 10 with us. And sometimes we fudge a little bit on that. It depends on the total amount. If when you add it all up, is it 4 million or is it 2 million or so they look at that as well. And they look at each individual situation, but 10 is, so to speak, supposed to be the guideline. Yeah.
And just this would be my last question on this would be short-term rentals versus long-term rentals. Where are we at with that now with Home Express? Are we still taking it on the long term, making it work, but they can use it for short term? Or if it's been a short term and we can prove it X amount of time and show that, what's the thoughts on that? Because that seems to
Yeah,
be a
short-term
question.
rental is something now that is relatively new to us that we do on DSCR now. Short-term rental is not used that often, partially because unless it's really in an area or a property that's already earning quite a bit, it sometimes it isn't worth it. And the reason I say that, I mean, you could just still do it as a long-term rental and say it's being used as a short-term rental. That would be okay. And the reason some people do that is because we we go max 75 LTV versus 80 on a long-term rental. We also cut the rents from the market rent schedule down.
That's right.
So short-term rental we use 80% and long-term rental we use 100%.
100%.
It's still probably
That's
80%
what it
of
is.
probably a higher number, but if it I mean, I have a short-term rental, okay? And so it probably would pencil out about the same either way because it's not like so
It's by
it's in the
design because
foothills.
there's
Yeah,
vacancies. It's different. Yeah.
it is. So you have to look at each individual situation and see what works best. Sometimes that short-term rental really works good. I've done a few of them, and then the number comes in way higher than it would on a long-term rent, and it's pretty much needed to get them to that 1% DSCR that they'd like to have.
Do you
Yeah.
allow people to close in LLCs?
Yes. Yeah. We do
Okay,
those all
I
the
like
time.
it.
Yeah. Mhm.
Now, I know you do DSCRs, and I shared that with you that, gosh, I don't think I've ever asked you what other products that you guys do. I'm assuming you have more products than just DSCR. What other
We
products
do.
do you actually have at Home Express?
So we have the probably the next most popular program we have are the bank statement loans that
Okay.
we use bank statements to document income for self-employed people, and we
These
do
are primary
those.
residences and or
See,
both?
some people do them on non-owners,
Okay.
again, because maybe they can't get that DSCR in line, and that those bank statements really they qualify fine with bank statements for full. I mean, we call it alt doc. It's kind of like full doc, but it's priced the same. Full doc and
Okay.
alt doc for us are priced the same. Um, and so bank statements are probably the next most popular. People like us for that product because many companies, many of our competitors use a 50% expense factor. They take a haircut of 50% on all the deposits for 12 months. We actually do two things. First of all, we estimate one based on their actual profile of their business. And if we think that it's somebody working from home, we're not going to hit them with 50%. We're probably going to go 30 or 15. And then we also allow, in place of our estimate, for you guys to get a CPA letter, or it doesn't have to be their own CPA, but just some tax preparer, either that has done their taxes or has reviewed their taxes, and they will say what that expense factor has been averaging. And we'll take that in place of our estimate. So that we have a lot of flexibility
Okay.
on that.
Is that where the CPA letter where it says, I swear that it is this? No, I'm kidding. Um,
Yeah, none of them will say that. But yeah, so they usually will say it's, I've reviewed their if they just reviewed them and didn't do their taxes, I've reviewed their taxes over the last so many years. It looks like they're averaging blah 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 percentage in expenses, and the underwriter still does look at that and decides if they think it makes sense. So it can't be a restaurant saying that they have a 10% expense factor,
sure.
because the underwriter's going to say, no,
We
we'll
know it's
never
higher.
sell that loan. We can't do that. Yeah. So
Tell me this: do you lend outside the United States? Like people call me up, they want to buy something in Cabo. People want to buy something in Costa Rica or what's it? Not Dominican Republic. What's the one that's still the United
San Juan,
States? What's it? Puerto Rico.
San Juan, Puerto Rico.
San Juan, Puerto Rico. Do you lend in those areas?
We don't. We
Okay.
only, yeah. We do foreign national loans so in other words, we'll do loans for people who live in those areas and want to buy a rental here, but not the other way around. No.
Okay. And just you made me think of something. DSCR loan. Do you have to be a citizen of the United States?
No, no. And that's how we do the foreign national loans. We do them
Okay.
as DSCRs. They have to vest in an LLC. Um, and I believe the max is 75 LTV. I don't have it up in front of me, but yeah, we do those.
Okay.
And there are quite a few people who live in other places who want to buy here for
No,
rentals. So
absolutely. Anything under the sun is possible now. That's that's what I know. But it's a business purpose loan. Most of the states for the exams don't even want those anymore. They're like, we only want primary residences, which is kind of there's a couple states that do, but for the most part, I'm like, gosh, and my
yeah.
investors are easier to deal with. It's just at my age, I'm 58. I that's where my business has gone over the years is with investors. I'm now in 44 states and I can show them value in different states, and California might not always be the best place based on the
No.
market, and they can maybe buy two homes in southern Georgia. Because rents are very strong in a lot of places. Is what I've
Mhm.
learned.
Yes, that's good that that's valuable information for you to know, and that's really helpful for the investors because that's one thing they don't always know.
No,
So,
you get them outside their market. And but the best thing I do is I like finding brand new homes by a named builder. DR Horton's phenomenal in California, and I say, look at this property. This is the same model in Lincoln, California. This is 220. This one is 580.
wow, yeah, that's good.
Which DSR would you want to do it? It's the same exact home, and here's the rent. And I can
Yeah.
show them and say, have your real estate, I'll do the loan. But I can suit that out to my people. And, they're like, oh my gosh, I'll do that. Rich, I'll take two. Right. It's like, and they're brand
Yeah,
new
perfect.
homes, right? They're not
Yeah.
buying a 30-year-old home in California. Um,
Right.
so, I mean,
That's
just
perfect.
trying to
Yeah.
create business, right? Always
Hmm.
trying to think. But I like that because that's what I look for too. So it's like, well, I'm doing the same thing. So therefore, let me show you what I'm doing. They're like, how does that work? Well, I go down and look at it for you because I'm here. I could go in 2 hours. I could be Alabama, Tennessee. I could be North Carolina, South Carolina, down to
Wow.
Florida, down to southern Georgia. Um,
Yeah.
I can be in a lot of places because I mean, you can burn through the whole state of Georgia in 2 hours. It's pretty fast.
Yeah. Yeah. That's so interesting. Wow. I've never been, but I see
What?
on the map how small it is.
Yeah, it's you can be in a lot of places. Well, all right, that's enough of the loan talk. Everybody knows you're an AE. We all knew that, but that's not really what I brought you on for. I had you cornered, and these are common questions that come up, and I'm actually going to put these in writing for people that don't want to ask those questions and say, look, here's the skinny on that. Just know these things about that product, and then from there, just pick up
Hmm.
the phone and call Patty. Um,
Absolutely. Yeah. Yeah.
Always. But Patty, I've known you a long time. You could do anything you want in your life. You're very successful at what you do. What keeps you in the loan business after all these years?
It's always just felt like a good fit, but I would say mostly the AE job has felt like a good fit. So the good news is I've tried other aspects of our business. So I've
Yes,
been a loan
we
officer.
were loan officers together at one time.
Yeah, both of us were loan officers, right? Loan officer, realtor, and AE, right? So I think I like the business to business better because I tend to like building that long term relationship, and I really enjoy that. And so that's partially why I probably enjoy my job. I think I also enjoy educating, especially new loan
Educating
officers. I
me.
mean, it's kind of fun to see the light bulb come on, and and explain things to them, and because I've been doing it for so long, it's very easy for me to educate them, right? So yeah, I'd say those are the two main reasons why I've stayed as an AE.
I can tell you that when my people talk about you, they talk very highly of you. Because somebody says, like, really, Patty? Are you sure you got the right Patty? But I'm talking to Brandy Stevens, to the Jill McCains, we Amanda Rawls, these people are producers, right?
Hmm.
And they
Hmm.
bring your name up when someone asks, just call Patty. Just just call Patty.
I love that.
It's
I
like
love
stop
that.
doing this and
That's what I
just call
strive
Patty. She'll
for.
help
Yeah,
you.
that's good.
I've I've never had a transaction that got weird. I'm not saying I'm not saying we don't bring you hard transactions. I mean, we know
Right.
those are out there, but
Yeah.
you're just consistent day in and day out, and that's what I think I've appreciated over the years, because that's what my investors want. You're correct. They don't want to pull teeth in the 10th hour or the 100th hour, however they want to say it. That's why I don't
Right.
do the Fannie Freddie stuff no more, because stuff comes up all day and we're just beating them up. I have a guy that
Yeah.
just bought one sight unseen, and he goes, "Well, Rich, I want to go Fannie this time." I said, "Then I'm not your person." He's like, "What?" I said, "I won't do it to you. I won't do it. You've got like 12
Yeah.
properties.
Right. Right.
They're going to beat the living hell out of you,
Oh
and
gosh.
you write
Yeah.
all your income off. Why would you look? I need one document, and we're
Right.
done." Like he's like,
Hmm.
and they finished, and they're like, "Okay." And then I showed them the rate. Whatever we did, it was about a 0.5%, and I said, "That's it. For a half
Yeah.
percent, and I'll keep the fees very reasonable." Um,
Hmm.
Matter of fact, on these people that come back over and over, I give them smoking deals, right?
Hmm. Yeah.
Because they've been with me for so long, they trust me with it. I'm not out to gouge anybody, and it's about getting them in those properties. Why? Because that guy has referred me tons of people over the years, and he'll do
Hmm.
another 50 loans in his
That's
lifetime with
right. And
me.
that's something you have to
I can make
realize. Yeah.
less. I can afford to make less, but um,
Hmm.
I stay with my trusted sources, and you're one of those people. A lot of my stuff ends up going through Brittany Wilkerson or some of the other processors, so you might not even know it's my deal, but
Yeah.
because I have teams based on where it's at, and I hand them off, say go get them. Um, but I never get to say thank you to the people who have helped me in my career, who've helped me grow my businesses, and you're one of those people. And so part of this today is to say thank you.
Aw.
I would not be where I'm at without certain relationships over the years, trusted relationships, people that have gone through just everything the same as I have. And nobody's immune to this industry, believe me. But there are incredible, good people that still remain in this industry today. even after 30 to 35 years. And I have people call and say, well, just give me some of your deals. I'm like, cool. How would you like this? I'm giving you all these deals. You've earned it all these years. And you say, Rich, what happened? You're giving me 20 deals a month. And all of a sudden I'm getting two. Oh, I just tried to give this guy a chance. Like, wow, what did I do
Yeah.
wrong? Oh, you didn't do anything wrong. It's like, I'm not going to do that. Those days are over.
No.
I'm not going to
Yes.
retest the waters. Now, if Patty gets out of the business, I'll have to find a new Patty. As a matter of fact, well, my name's Jackie. No, for now on, you're called Patty. No, I'm kidding. But it's I don't have many more years left in this industry. I'm definitely on the downside. I've been doing it 35 as of September 1st of this year. And boy, it's gone by fast, Patty. It's gone by really fast.
Really fast. Yeah, really fast. I agree. Yeah, it's crazy. But yeah, well, thank you too, Rich, because I appreciate you. When you made the move to Georgia and you started over there, you thought of me, and it's really worked out well. I've worked with a lot of your loan officers. I hope to work with more of them, and so it's really worked out.
I think part of that is things like this where I'm trying to get back into the side of educating people. As of January 1st, we're over 600 loan officers. I'm 3 years in. It's gone by like that on this company. And I'm like, okay, we built it. I need to get out from behind the desk. I need to do what I do best, which is the origination side, working with my loan officers, helping them understand. It's one thing for us just to do a meetup and you talk about your programs. They That's not what I'm after here. What I'm after here is to say, well, how does Rich actually do it? Well, let me tell you how I do it. I do it because of these relationships. And guess what? On a given day, yes, somebody else might have a little bit better rate than Patty on a given day, and vice versa. I don't chase it that way. I have
Hmm.
this kind of product. I'm going to Patty, and it's a done deal. Like, why
Yeah.
would I mess with what works? And you make me successful. You make me look good. My real estate partners love you, and they love the process, and they trust me to get that done. And they're trusting me when I say Patty's got it. And
Hmm.
I only have about 6 of those relationships, and I'm going to be highlighting all those because you guys deserve it. I want people to know why I do what I do and why I don't. The same reason why I don't go outside of those relationships. I'm not going to experiment. If it doesn't fit with one of these 6, then I'm not doing
Yeah.
it. It's not a good fit for me or for my
Right.
customer. It's okay to say no once in a while. And part of that, people need to learn it's okay to say no.
Right. That's part of that building that, like I said
Oh,
before, part
absolutely.
of building that long-term relationship is it means something, and in the end, it actually helps everybody. So,
Yeah. Well, I want to
yeah.
know this. I never asked you this before. And this is the part because everybody says, oh, Patty, HomeXpress, she's an AE. I get mad that we put everybody into that front door type thing. If they would just take the time to say, before you put her into that, who are you when you're not doing loans? What hobbies do you have on the human side when you're not in loan mode, which is probably much of your time? But I want people to know who actually Patty is.
Sure. Well, I'm married. I have a 24-year-old daughter who
Okay.
graduated from college about a year and a half ago. She lives in San Francisco. Um, I have a very old dog. He's 16 years old. He's Oh no, he's not here. I was going to show him to you. He's always sleeping, but he's doing really well for 16. He's a border collie. We have a cat, and let's see what else I got. I love to be outdoors, hiking, running. I just really like to be outdoors. So when the weather's bad, I'm not happy about it. But I'm in California, so I really can't complain. Um, and Yeah, that's about it. We have a little second home that was my mom's place. Every so often we go up to, and I have it as an Airbnb. So if anyone wants an Airbnb in the
You said
foothills of
up to it. Is that
California,
like a Tahoe or Truckee or?
it's in an area. Do you know where Plymouth is?
Yeah, I know where Plymouth is.
Okay, so there's a bunch of wineries up there, a whole bunch actually, about 40 or 50 wineries. And the house is literally like 5 minutes from the first winery. And so it's really most people who stay there are doing wine tasting or going to a wedding or something like that. It's in a little town called River Pines. So yeah, it's a cute little place with a hot tub, and so we have that, and we like to go to Hawaii. So
Is your husband still doing real estate?
he's a real estate broker. Uh-huh.
Okay.
Yep, and he is doing listings at a discount. I think that's his niche. That's what he's been doing for a very, very long time. My daughter's looking for jobs, so if anyone wants to hire a really good, she's a lot like me.
She doesn't want to do the loan industry?
What's that?
She doesn't want to get with you in the loan industry?
I I think it's on the bottom of her list. Maybe she's looking for her own thing. She will do really well in a business to business sales. She's very outgoing, not shy, will do a great job for somebody, but it's a hard road for new graduates right now. So
Uh, it is. It is. Where'd you graduate from?
San Francisco State.
Okay, nice school. Nice school. That explains why she's still out there. Once they get them, they don't let go of them. No, it's it is different right now. I'm hoping next couple of years, maybe we will see a revibrance of some sort. I'm hoping we're at the tail end of whatever the weirdness we're going through. Who knows?
Yeah.
I'm crossing my fingers. I've had a lot of
Right.
people suffering for the last couple of years. What did we say? Over 400,000 licensees at the end of December 21 to 93,000 as of just a month ago.
I
in
heard that.
time span,
Yeah.
less than 28% of licensed real estate agents did at least one deal last year. That we're ready. We're ready.
Yeah. Yeah, definitely. Yeah. Uh-huh. Yeah. So yeah, that's the personal side.
Yeah, right on. And I didn't mean to put you on the spot like that. I want to ask you this. What kind of advice would you give after all these years? And this is your advice, but what advice would you give to your younger self knowing what you know now?
Oh, don't be shy to go after it. Don't, to go after the business. My dad taught me this business, and I didn't take it as, not my dad, my stepdad actually. Uh, I didn't take it as seriously back then, as I now realize how important it was what he said to me. He drew a picture of two bellies and two belly buttons, and he said, "This is all you need to remember." And I'm like, "Huh?" I was just newly graduated from college, and I was like, oh, "Okay," because basically what he was saying is go build the relationships and meet with them face to face. Of
Make
course,
contact. Yeah.
with technology and stuff nowadays, it's so hard to meet face to face anymore because you're constantly need to be in front of your laptop or something. But that is what I did, and I did it hardcore. But I was afraid sometimes. I was shy, or oh, I don't want to go in that office, or I don't want to those people are now I know that no, that's none of that matters. You judge yourself way more than other people judge you. So that might be one thing I would probably say.
I like it. What would you give advice wise? I mean, you do a lot of investors, but talk to me about investor mindsets. Like on your side, do you see a lot of first time people getting investments? Do you see a lot of big time investors who are just dominating the market with the DSCR? Do you see a little bit of both? What do you see on your side as the type of borrower that's come to you for those DSCRs?
No, it does seem to be kind of all over the board, but more first time investors than I would think. And that might be because we don't have a guideline. Some people have that guideline where you can't be a first time investor, or you can't be a
Yeah,
first time home
yeah.
buyer. We allow first time home buyers and first time investors. The first time home buyer guideline has to make sense. They can't, it just has to feel like we do really truly, they live in San Francisco and they're renting and they're buying in Sacramento rental. Well, that makes sense, right? But so I do see them all over the board, but we do get what we call them 5 packs, 4 packs. So we get one investor who submits 5 loans at one time. We do get a lot of those too. Yeah. And they're doing cash out refis, maybe to buy some more rentals. So it's probably 50-50 on that. I would not say it's one more than the other.
Well, you said something. So DSCRs can be used for cash out as well.
Mm-hmm.
So I did. That's what the last one I did was a cash out on one of mine to do something else, versus doing a 1031 exchange. I didn't want to sell the property. Now my wife's like, "Here,
Right.
we're going to
Good.
sell," and I'm
Yeah.
like, "I don't want to sell."
Yeah.
Other questions, limitations. I'm 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 assuming there's nothing on the building side of that. Let's say somebody buys land, builds a home, it's real property, it's all signed off and permitted. Do you have any limitations on that kind of stuff? Because now they want to rent it out.
No, we actually do. I get those. Quite a few of them.
The reason I say
Yeah,
that is
real
because I'm
good.
seeing a more of a resurgence of those. I noticed the one-time close at UWM allows you can build up to a fourplex rental property if you want. And it's like I can't get rental properties. So I'm like, okay, maybe I'm going to start building some rental
Yeah.
properties because
Yeah.
land. There's a lot more land out here, and I'm like, okay, maybe I can build. Um, I see a lot of people doing stuff. I'm like, I wonder if they're doing this, this, and this. But
So the catch to that one is,
yeah,
as long as the property was just completed within about 30 days and you come to us and they're not rented out, it's not rented out yet. We're okay that it's not rented out because most refis, we want it to be rented out. We want a tenant in the property. But if they just got done with a major rehab or they just got done building it and we can prove that it was real recent, then we will allow that. And I think that's just because they don't want somebody doing flips or spec building it to
okay,
sell. So they figure, okay, if it's been within 30 days, okay, we believe that you're gonna rent it out. But if it's longer than that, then they look to see, has it been listed? Why is there no tenant in there? Yeah. So
okay, all right. But if they put tenants in there right away, and we can, like they're all rented and stuff. That's the preferred. You want to see that it's
but
actually
yeah, that'd be
rented.
awesome. That'd be
Okay.
even better, but it's not
Well, they're
necessarily
producing
required.
some
Yeah.
money. Okay.
Yeah. hmm
Well, I guess, how does that work if it's already a rental? Well, I guess if I remember right how I did mine, they just did was it the 1006 and they said what the going rent was and that's what they used. It didn't matter what I was getting. It was what the
And
1006 said.
yeah,
Yeah.
that's what we use most of the time. We use the 1007 market rent
1007.
schedule.
Okay.
We do allow you to use the actual rents if it's more, but then it's going to be 80% of those rents. So you're just better off using the 1007 most of the time. Yeah.
Well, and it's yeah, I'm trying to remember what it was on we get these people coming after us for everything. Is it a max of 4 units, or are you guys now offering anything above 4 units, being that it's a business purpose loan?
No, we're only going in 4 units right now. We did go 5 to 8 for a little while, and then they stopped doing it. I don't know if it's coming back or not, but yeah, right now, yeah, just up
Why?
to four.
Why is that? Why won't they do more units? Why? What is the reasoning being that it's a business purpose loan? Is there a reason to keep it at 4 units or less?
I think the investor demand, the people who buy our loans, there's just not enough demand for it, is what I
Right.
think.
I think
hmm
people forget about that. There are so many products behind the scenes, like FHA adjustables, VA adjustables, things like that. And people don't realize they exist, but there's no market for it. So they just don't offer them.
That's right.
Somebody just started
Yeah.
offering a 5-1 arm for FHA, and I'm like, oh my god, I haven't seen that in years. I remember seeing like one of the best, like 3-2-1 adjustables at FHA a long time
Right.
ago.
I
You
remember.
qualified
Yeah.
start rate. I mean, those are out there, but there's just no market for it, I guess. But maybe they'll start coming back. But you got the FHA disaster loan. You got the FHA if you're going to do energy efficient. There's so
hmm
many little products at 203K. And the reason I'm saying this is because when you understand all the products, now you go into DSCR, things like that. When we worked together at Neighbors, I was trying to get good at the 203Ks. I was trying to get good at the first time home buyers, Cal HFA, um,
Yeah.
MCC certificates, which a lot of people don't do anymore. Is that not a thing anymore?
I haven't seen it. We don't have it anyway, but
Yeah, for your guys'
we
stuff. But
FHA, and actually our pricing is really good on FHA, but we don't have a lot of the expanded products, and maybe nobody does. I don't know. I haven't heard. I had 203Ks. I did a couple of those myself when I was at Neighbors, actually,
right.
because they had a processor who knew how to do them, and that processor got me through it because those are not easy. But yeah, no, You don't hear about all those little nichey things so much anymore.
Yeah,
Uh,
I've always tried to know all that's available to me so that if something comes my way, it's like I don't want to lose out to somebody because then it makes me look stupid. Like, well, maybe Rich doesn't know what he's talking about. So I'm always trying to stay up on what's available. But then I come
yeah.
across stuff that I'm like, I don't care if that's available. I'm not going to do that type of a loan because we
Right,
start
right.
scraping the bottom of the barrel sometimes, and it's not something I feel comfortable with putting saying
Hmm.
that, well, Rich helped me do this. Just like I probably shouldn't have been doing a lot of pick a pays back in the day, but that's
All
all there
right.
was. And
Yes.
why wouldn't you put people in house? Because if you didn't, then somebody else would. But when you look back, you're like, um, I don't want to set people up for failure. And some of these
Hmm.
products I feel like are very possibly setting it. For example, if you got a 500 score, maybe you can get an FHA at some of these places, but you have never proved that you can make payments. You are going to double your payment. That's a recipe for disaster. And sure enough, the lender that offers that, I've had a lot of EPDs, early payment defaults, because sure enough,
Yes.
they're not making their payments. Guess what?
Yeah.
We're paying back the commissions. And it's like, oh my gosh, it's like a pattern.
That's smart of you to, yeah, because you do have to look at that. Sometimes, I mean, most loan products these days, I think, are a little more geared towards success than they were back in the subprime days. But there's still those that you just kind of know with your gut that it's probably not going to go well. So
I
you
agree.
just have to know, you know.
Well, this is your window because every single person at my company is going to see the 620 loan originators. Maybe there's 18 today. It goes up and down every day. Um, what's one thing you would want a captive audience to know about you or Home Express? You got open reign to say whatever you want on that.
All right. Well, first of all, I think we touched on it a little bit. You know, I do enjoy building the relationship and educating. So you can always pick up the phone and call me. I'm not afraid to take a phone call. I know some people don't like that anymore, but I do. Either way, email is fine too. But just call me. Sometimes a lot of these deals are complicated enough where just an email is probably not going to do it because I need to ask the proper questions to give them the proper answer. And many times we do find a way to do it when it first started sounding like it wasn't a very good loan. And then all of a sudden I find out more and I dig deeper. So it's always good to pick up the phone if you're just not quite sure. And many times I will anyway. I'll get an email and I just don't have quite enough information. I'll pick up the phone. Um, that and just, as far as Home Express goes, few things to keep in mind. I mean, we're not perfect, right? Nobody's perfect. But I've been with the company for 6.5 years for a reason, because I feel like we're very consistent with getting the loans done. My expense, I'm sorry, not my expense, my closing ratio is very high. It's one of the highest in the company, and that's because sometimes you're going to hear no from me. I'm probably going to say sorry, can't do it, and that's because I don't want to waste your time, get you all the way down the road, and find out that
Appreciate
we
that.
can't do it.
Very
Yeah.
important.
And many times if I'm questioning it, we have management that we can go to and ask before they even submit it. So, um, but Home Express is a good company, and I think we're relatively fast. And we want our clients to be happy. So everyone's it's has one goal.
Yeah, I feel
So
like you guys have like a little niche that you guys do very well. If the company if you're the window to the company because you're very calm, cool, and collected, you're not all over the place, which helps when you're trying to do transactions that people aren't comfortable with. You're very knowledgeable and you walk people through very well. It's like just pick up the phone and give her a call. There is no stupid question. The stupid question is the one that's not asked. Like just ask, because I ask questions all the time because it's always changing. Um, For example, I'm going to ask this question. When it comes to the bank statement side, is that personal bank statements or business bank statements?
that's a good question. So we will accept one or the other. Um, the personal bank statements, if they don't have a business account, which is usually the case, right? They're just using their personal for their business. then we still apply an expense factor to it, just like we would on a business account, but
Okay.
you can use either one. Once in a while, we get them where they actually are depositing more into their personal account, but they have a business account, and actually like a current business account, they're just not using it. If they can prove they actually have their business account out there, but they're using their personal, or they want to use their personal for the deposits, we don't apply any expense factor to the personal bank statements, because we look at it like the expenses are being run through the business account.
Do they have to be self-employed to do that? Like if they're a
Yes, they have
W-2?
to be. They have to be at least 25% ownership, self-employed, and at least 2 years. Well, I take that back. We have a program for 1 year self-employed if they're in the same exact line of work they were as a W-2 earner just prior.
Okay. And is it 12 months bank statements?
12 months always. Yeah. We
So if
used to
my
do
bank
24,
statements
but we
are 85 pages long, you still need 12 months times 85 pages.
each of your bank statements is 85 pages. Oh, well,
They're
you're
huge. They're
the
huge. And that's just
yeah.
one if bring both bank statements. But most of the money comes in one. I get scared on those things because the bank statements are so big anymore. And I'm like, oh my God. But they're PDFs, I guess. Back in the day, we used to have
Yeah.
copy, fax. Let's fax those over. Oh my gosh.
Yeah,
Patty,
yeah. Well, and we have an income desk now, just so you know. I don't know if everyone knows that, but
I didn't know that.
on our broker portal, they just upload the 12 months bank statements and a self-employment questionnaire that we have on our portal. And we will calculate the income, and we'll actually go ahead and give you what we think the expense factor should be right then and there. So,
Okay,
and
that's really
that actually
valuable.
is required anyway. What's that?
That's very valuable. Is that true of a full doc calculation too? They can upload to that, or is that only for the bank statement side of it?
It's just for bank statements. Yeah.
Okay, just
Yeah.
double
It's
checking because
important.
I can see where people be
Yeah.
wanting to
You
take
never
advantage.
know, right? Yeah.
No, I didn't know
Yeah.
that. That's actually pretty good because going through the bank statements and trying to see what's going to be allowed. Was it a transfer? Was it a true deposit? Different things like that.
To you, because I think this is an important one to know about. A lot of people don't know about it.
Mhm.
Is the asset program. I do quite a few
Asset
asset.
depletion.
We have two asset programs. One is like everybody else's. You combine it with their income to get the DTI in line, and that one's kind of like everybody else's. We divide by 60 months, and come up with an income off the assets. But the other one that's kind of cool is you can use assets only. And as long as you have 125% of the loan amount in either a retirement account or a brokerage account or savings, and seasoned for 6 months, we will let you just use just that. Now, we only use 70% of the retirement. We only use 90% of the brokerage, but that's all you need. You don't need any other income, and there's no DTI calculated. So it's a pretty cool product.
And it has to be how much compared to the loan amount?
125%. So it's not really that much.
No, it's not really. So if you had
It's really
$100,000
pretty easy product.
purchase price or loan, you'd need 125,000 verified, subject to the 70 and
Right.
80% rule or 90% rule, depending on
Yeah,
where it's at.
exactly.
And so you're not
Yeah.
calculating
So,
anything on that. You're seeing the assets that they have more than enough to do it. That's literally it.
yeah, that's it. That's
Now, where
it.
do the rates fall on these programs? Is the DSCR the base, or which one's better, a bank statement or a DSCR?
Well, first of all, that product I talked about is only owner occupied, but the DSCR and bank statements, if you're going non-owner, the bank statements will be a little bit better, about a
Okay.
quarter better.
Okay.
Yeah.
All right. Good. I like it. I'm liking what I'm hearing. I mean, DSCR is because when you don't want to put, but sometimes bank statements isn't that bad. I can grab 12 months bank statements. All right. I'm liking it. Why am I picking this up part so bad? Is because I shared it with you. I believe every loan officer and every real estate agent that we work with, we should be striving to make sure that we all have at least one rental property so that we can start building our personal portfolios. We should all have other sources of income, not just the one source that goes like this every month. It
That's
helps
right.
level that out a little bit. There's months
That's
where I
right.
haven't received a paycheck, but yet my rental properties are paying.
Yes.
That's a good feeling. And Tambra
We've
Jenkins,
done the same thing.
yeah,
We have rental
absolutely.
properties. Mhm.
I saw Tambra Jenkins help this one guy, and she helps investors all the time. One of them finally said, "Why don't you have any?" Well, she went out, and now I think she has two or three, and those have
Good.
helped her through this last
Yeah.
3 years because it's been slower in California. And watching
Hmm.
her, she swings a hammer and she refurbishes. She's done phenomenal with it. Her story
Oh,
alone,
wow.
I'm like, if she can do it, anybody can do it. And she didn't start at
Yeah.
one. Now she has like two or three, and she's
Awesome.
refinanced the cash out and buying it. Like she's figuring it out. She will be that
Hmm.
person with 20 or 30 of them here in the next 5 years because it's becoming easier and easier and easier. She
Yeah.
also talks the talk, walks the walk, and it makes her so much more attractive out there to people who want to do loans. She's not just a one trick pony type of thing. Um, by being so seasoned in so many things, and that's a scary thing. A lot of people want the investment, are afraid to go after it, and it's like, well,
Yeah.
she did it. Why? And she's a mom, a single mom with multiple kids. It can be done. If she can do it, anybody can do it. So,
That's
and I
right.
mean that with
Yeah.
full on respect for her. That's one of the best stories I love telling. All right,
That's
Patty. I
awesome.
know I kept you on the phone. I know that I want to say thank you again. Thank you for all your help and support over the years. I would not be where I'm at today without these kind of relationships. You have been part of that. I know I can pick up people that say, "I'll just get Patty on the phone." It's to be able to say that. I don't say that more than about six people. Outside of that, they don't get my backing, I guess, or they haven't earned it. Say it that way. You've more than earned it. You don't have to earn anything. If you never did another loan, you've more than helped me over the years and helped the people, the companies that I've had, which also blesses me as well. So I want to say thank you so much from the bottom of my heart for all the years and the partnership. I really do.
Well, thank you too, Rich. It's really been great. And it's so nice to be able to work with people that I've known for so long. And anything you guys need, just let me know. I'm here.
All right, there you have it. That is Patty Lederman of Home Express. That's home with a big Express. Make sure you get it right because I've spelled it wrong many times. It's a cool name though, by the way. Um, I have Hedge X Real Estate Investments, and I got the idea from Home Express.
Oh, did you really? How
And
funny.
I was
Yeah.
like, that's cool. Um, it's a like real now thing. But thank you so much, and I look forward to having more conversations with. I wish you nothing but prosperity in your career, and I hope 2025 just blows you away and you accomplish anything and everything that you've ever tried to accomplish, because you have helped others do that very thing.
Well, thank you, Rich. I really appreciate it. Thank you
All
so
right.
much for having me on too.
Well, like we say when we do an incredible interview with those California people, stay thirsty, my friends. All right, Patty. Thank you so much for your time.
Uh-huh. Thank you.
All right. Take
Bye-bye.
care.